There is a strange feeling in the market today. You open the chart and the first thing you notice is red candles stretching across every major asset. It almost whispers that something is wrong. Traders are panicking, liquidity is fading, and fear is crawling back into the charts. And right in the middle of all this uncertainty, one chart stands out because the next move can decide whether the coming days turn bright again or become even more painful. This is Shah, and let us break it down step by step. Coin name Ethereum, current price $2,810. A lot of people forgot what we talked about earlier, but the chart has respected every level almost perfectly. Last time we discussed the breakout from the falling wedge and the resistance waiting at $3,000. The plan was simple. We needed 2 daily candles to close above that resistance. Only then we could call it a confirmed breakout and expect continuation. But the chart had different plans. Those 2 candles never came, and instead Ethereum started forming a clean double top pattern, something we mentioned as a possible danger if price failed to hold structure. That double top scenario played out beautifully, and now all eyes are on a very important zone. The demand zone at $2,800. This is not just any random level. It is the same area where buyers stepped in previously and pushed the chart up with strength. If Ethereum can hold this level, we can still expect a recovery back towards $3,000. And with the entire market turning red today, this zone becomes even more important. A bounce here can bring confidence back into altcoins. But if this level fails, we will see a new low forming, and that will shift the entire market sentiment into deeper fear. Now let us zoom out for a moment. When a market is red like this, it does not always mean something is broken. Sometimes it is the market catching its breath after a long green trend. Sometimes it is a simple retest, and sometimes it is the market shaking out weak hands before continuing upward. Ethereum is sitting exactly at the point where all 3 possibilities can happen. The current structure is not fully bearish and not fully bullish. It is in a zone where one strong candle can flip the direction completely. If a daily candle closes below the demand zone, then expect a deeper correction. But if buyers hold their ground and keep price above 2,800, then the momentum can shift back in favor of the bulls. From there, the first target becomes the psychological level of $3,000 again. A clean close above that opens the door for a much stronger run. For now, the best approach is to watch how price reacts in this demand zone. The market is fearful today, and fear often creates the best opportunities for patient traders. If you want more breakdowns like this, stay connected and follow the updates closely.